Hello everyone, in this video I have put together various examples on calculating overtime. So let's get started. The FLSA generally requires employers to pay non-exempt employees overtime pay at 1.5 times their regular rate for all hours worked over 40 in a given work week. In other words, to determine the proper overtime rate, an employer must first determine the employee's regular rate of pay. When an employee's compensation consists of only hourly pay, then overtime rate is easily calculated. It's simply 1.5 times the hourly rate. But things get more complicated when employees receive additional form of compensation. The unit of measure to calculate overtime under FLSA is called a work week. Work week is a fixed and regularly occurring period of 168 hours, which is 7 consecutive 24-hour period. Different work weeks may be established for different employees or group of employees. And averaging of hours over 2 or more weeks is not permitted. So it is a stand-alone work week. In order to calculate overtime, we must first also calculate the regular rate of pay. The regular rate of pay includes all remuneration for employment except certain payments that are excluded by FLSA. So, shift differentials, non-discretionary bonuses, promotional bonuses, and cost of living adjustment bonuses are some of the payments that must be included in calculating the regular rate of pay. So the general principle is that all compensation for the hours worked, services rendered, or performance must be included in the regular rate. And when the payment is a wage supplement, even if not directly related to employee's performance or hours worked, it's still compensation for the hours of employment and must be included in the regular rate. And the determination of whether a particular payment, a perk, or a benefit may be excluded from the regular rate is made on the case-by-case basis, applying the requirements set out in the statute to the specific circumstances. Payments which are not part of the regular rate includes the pay for expenses incurred on the employer's behalf, premium payments for overtime work, or the true premiums paid for the work on Saturday, Sunday, or holiday. Then discretionary bonuses, gifts, and payments in the nature of gifts on special occasions, and payments for occasional periods when no work is performed due to vacation, holiday, or illness. Now, let's discuss the difference between discretionary and non-discretionary bonus. Discretionary bonus should not be included in the regular rate of pay, but the non-discretionary bonus is included in the regular rate of pay. So discretionary bonus is one that is given at a sole discretion of the employer and is not expected by the employee. The key to discretionary bonus is that employer has not set an expectation that the bonus will be paid if certain goals are met and the amount and timing of the bonus are not given in advance. On the other hand, the non-discretionary bonus does have specific criteria the employee must meet to qualify for the bonus. The employer predetermines the criteria and the employees expect to earn the bonus if they meet the criteria. Earnings. Earnings may be determined on a piece rate, salary, commission, or some other basis. Average hourly rate. The overtime pay due must be computed based on the average hourly rate derived from all earnings. And the formula to calculate the average hourly rate is total pay for employment, except for any statutory exclusions, in a work week divided by the total number of hours actually worked. Now here is a formula for calculating the overtime rate for hourly employees. Step 1. Total pay for the work week minus any exclusions is equal to the regular pay. Regular pay divided by the hours worked is equal to regular rate of pay. Step 3 is that regular rate of pay times 0.5 times hours of overtime is equal to premium pay for overtime. And then step 4 is total pay for the work week plus premiums pay for overtime is equal to the total weekly compensation. Let's understand these steps by looking at one example. Sarah has regular hourly rate of $8 an hour and worked 46 hours in a work week. She also earned non-discretionary bonus of $100. So step 1 is to calculate the regular pay. We'll multiply 46 hours by 8, the hourly rate, and we get $368. To that, we will add the $100 non-discretionary bonus, and we get the total regular pay for the week, which is $468. Now, in order to calculate the regular rate for overtime, we will divide 468 by 46 hours worked, and we get the new rate, which is $10.17. We will use this rate to calculate the overtime premium. So the overtime premium is half of 10.17, which gives us 5.08. We will multiply 5.08 by 6 overtime hours and we get $30.51. So now we will calculate the total earnings. 468 plus 30.51, total amount is 498.51. This slide shows you two different ways of calculating overtime. Let's look at the example. Sarah is an hourly wage employee who worked 50 hours within one typical 40-hour work week. She is normally paid $20 an hour and she worked 10 hours of overtime. So let's look at way 1. If we use this method, we will take all the hours worked, the 40 regular hours and 10 overtime hours, and we will multiply that by the hourly rate of $20. So we get the straight pay for all hours worked, which is $1,000. Now we have to calculate the overtime premium, which is half of the hourly rate. So 10 overtime hours times $20 times 0.5 gives you 100. We will add the 1,000 and 100 and we get $1,100. Now let's look at the second method. If we use the second method, we will first calculate the earnings for 40 regular hours. By multiplying 40 hours by 20, we get 800. And then we will calculate the overtime earnings separately. So 10 hours of overtime times 20 times 1.5 will give you 300. So add 800 to 300 and the answer is 1100. So both the ways will give you same answer and it's your choice whichever method you want to use. But I personally prefer way 1. Now let's look at the salaried non-exempt employees. Non-exempt employees may be paid by means of salary. Salaried non-exempt employees are still entitled to FLSA overtime pay if and to the extent that they actually work more than 40 hours in one work week. The FLSA overtime is time and a half of the employee's regular rate of pay, and when the non-exempt employee is paid a salary, then the amount of the salary must be converted to its hourly equivalent to determine the regular rate of pay. Now let's look at the example here. Sarah is paid a salary of $400 per week for the normal 40-hour work week. The hourly equivalent is $10 an hour. If she worked 44 hours in one work week, then she should receive overtime for 4 hours. So first we will calculate the regular earnings for all the hours worked. 44 times 10 is 440. And then we will calculate the overtime premium. So 4 hours times 10 times 0.5 gives you $20. So 440 plus 20, the total earnings for that pay period is $460. Now let's look at this example where Sarah has a work week of 35 hours and she typically is paid $400 a week. Now, to pay a non-exempt employee a salary, the employer pays the employee fixed amount per week and pays overtime at the rate of 1.5, the employee's regular rate. The regular rate in this method is determined by dividing the salary by the number of hours the salary is intended to compensate, which in this case is 35 hours. So, if the employee is hired at the salary of 400 and it is understood that the salary is compensation for regular work week of 35 hours, the employee's regular rate of pay is 400 divided by 35 hours, which gives us $11 an hour. That is the regular hourly rate. And then we have to calculate the overtime premium for the hours that are worked above 40. So hours above 40 are 10 in this case. So we will take $11 our regular rate times 0.5, which is for the premium of the overtime, and we will multiply that by 10 hours and we get $55 of overtime. So our straight wages, which are 550, we will add the $55 of overtime premium, and the total salary that she should be receiving for that week is $605. Let's look at another example. Here, Sarah has a flexible work week and she's still a salaried employee, a non-exempt employee. She typically is paid $600 a week and she works 35 to 45 hours a week. And she has worked total of 50 hours in this work week. Now let's first understand this. The employer and employee has an agreement that whatever hours the employee works, the employer is going to give a fixed salary. So the schedule may be flexible, but the employee will get a fixed salary. So even though the fixed salary is not based on the number of hours worked, you still will use the number of hours worked each week to determine the overtime rate. Since the salary is intended to compensate the employee at straight time rates for whatever hours worked in a work week, the employee's regular rate will vary from week to week. So in this case, we will find out the regular hourly rate by dividing the salary by the total hours worked this week, which are 50 hours. So her regular rate is $12 an hour. Now Sarah will be receiving fixed salary of $600 plus she will receive the overtime premium. And the overtime premium is calculated as $12 times 0.5 times 10 hours of overtime, which gives 60. So the total earnings that she will receive during that week is $600 fixed salary plus $60 of overtime premium. Now, as per FLSA, it's okay to pay the fixed salary in flexible work week as long as the salary is high enough to ensure that when the employee works overtime hour, their salary don't fall below the minimum wage. So as you see here, the salary is $12 an hour, which is quite enough above the minimum wage. So it's okay to pay the fixed salary and not calculate the earnings based on the hours worked. But we will calculate the overtime premium for the hours that were overtime. Let's look at one more example where the pay frequency is bi-weekly and we have to calculate the earnings for this pay period. In this example, the employee makes $1,500 every other week and the employee worked 40 hours in week 1 and 43 hours in week 2. So the employee gets $1,500 for 80 hours worked. So how do we calculate the hourly rate? The first step is to calculate the annual salary. We know that bi-weekly means that he will get 26 checks in the whole year. So we will multiply 1500 by 26 and we will calculate the annual salary, which is 39,000. Then we will calculate the annual hours the salary is entitled to compensate. So the total annual hours are 40 hours in a week times 52 gives us 2080 hours. Then after dividing the annual salary with the annual hours, we get the hourly rate of $18.75. The employee is getting a fixed salary of 1500 bi-weekly for 80 hours, right? So to calculate the overtime earnings separately for the 3 hours, we will have to multiply the hourly rate by 1.5 because the overtime rate is 1.5 times the regular rate. And note that the 3 hours of overtime were not factored into the straight earnings of 1500. That's why we need to pay overtime at 1.5 times the hourly rate, which gives us $84.36. So we will add that 84.36 into 1500 and the total earnings are 1584.36. There might be instances where the employees may work different shifts or with different rates of pay, or they might even have 2 different positions with 2 different rates. So to calculate the overtime in that situation, the dole stipulates that employers use blended weighted average rate. Let's say your employee worked 2 shifts, one at $10 an hour for 24 hours and the other shift for $12 an hour for 24 hours. So she worked total of 48 hours in a work week. So how will we calculate the overtime in that situation? Let's see that. First, we will calculate the regular earnings based on the hourly rate for both the shifts. $10 times 24 gives you 240 and $12 times 24 gives you 288 and the total is 528. So 528 regular earnings we will divide it by all the hours that are worked during the work week and we get the average weighted rate of $11. We are going to use this average rate to calculate the overtime premium. She worked 8 hours of overtime and the average weighted rate is $11 and the premium is 0.5. So the total amount is $44. Note that she has already been paid for all hours at the regular rate. That's why we are only calculating the premium here. So the base rate of 528 plus the overtime premium of 44 gives us the total earnings of 572. Let's do one example on the piece rate earnings. Sarah is paid on a piece work basis. She worked 45 hours in a week and assembled 500 dolls. She earns 1.25 for assembling each doll. Now, when there is a piece rate job, then the regular rate of pay for an employee paid on a piecework basis is obtained by dividing the total weekly earnings by the total number of hours worked in that week. And the employee is also entitled to an additional 1.5 times his regular rate of pay for each hour worked over 40, plus the full piecework earnings. So here, first we will calculate how much she earned for all 45 hours. So she assembled 500 dolls and the rate is 1.25. Her total earnings are 625. Now she worked 45 hours, so we will calculate her regular hourly rate by dividing 625 with 45 hours worked and her regular rate is 13.89. Now this rate will be used to calculate the overtime premium. In addition to the straight time pay, employee is also entitled to the overtime premium, which is half of the regular rate for each hour worked over 40. Our overtime hours are 5. We will multiply that by 13.89 and then we'll multiply that by 0.5 and we get 34.73. So our total earnings for that week are 625 regular earnings plus 34.73 overtime premium. So the total amount is 659.73. Now let's understand how to pay a tipped employee. The FLSA permits employers to pay tipped employees a direct cash wage as low as $2.13 per hour, provided the employee's direct cash wages plus tips equal or exceed the federal minimum wage, which is currently $7.25. In such cases, the employer then take a tip credit towards its minimum wage obligation equal to the difference between the required direct cash wage and the federal minimum wage. And the maximum amount of tip credit that the employer can take is $5.12 an hour. When the employer takes a tip credit, the overtime is calculated based on the full minimum wage rather than the direct cash wage. When it comes to calculating the overtime for tipped employees, it's not simply as multiplying the tipped minimum wage by 1.5. There are few additional steps. Let's look at the steps for calculating overtime for tipped employees. So, first step is to multiply the regular minimum wage by the time and a half to get the overtime minimum wage. Then subtract the tip credit from the total overtime minimum wage. And the last step is to multiply your total hours, the overtime hours, by that rate. So let's understand these steps by an example. In this example, a tipped employee works 50 hours in a work week. Let's assume that the employee lives in a state where the minimum wage is equal to the federal minimum wage. The employee receives a direct cash of $3 an hour from the employer, and the employer applies a tip credit of $4.25 per hour towards the minimum wage. Beyond tips and direct cash wages, the employee receives no other compensation. So let's see the steps. First of all, we will multiply the 50 hours by the direct cash wage and we get $150. Let's say that the employee received the tips of $250. So the total straight earnings including the tips are $400. The total straight earnings at the minimum wage should be $362. So we will compare what she is earning and what should she get at the minimum wage. Now because she is earning more than the straight earnings at minimum wage of $362, so the employer earned the full tip credit because the employee earned enough tips. Now for the overtime, the 10 hours of overtime, how do we calculate that? We will take the minimum wage of 7.25, we'll multiply that by 1.5 and we get the minimum overtime rate, which is $10.88. Then we will subtract the tip credit that was taken by the employer and we get $6.63. Now the $6.63 is the rate that we will apply to the overtime hours and we get the amount of $66.33. So the total earnings are 150 plus 250 tips plus 66.30 and the total amount is 466.30. Let's look at another example where the tipped employee did not make enough tips and her earnings went below minimum wage. This is the same example as previous one, only I have changed the tip amount from 250 to 150. So he's still having the direct cash wages of $3. She worked 50 hours, so her earnings are 150. Tips that she received are 150, so the total earnings are $300. And the minimum total earnings as per the minimum wage rate should be $362. So the employer will pay the difference of $62.50, which is the shortage of tips. Now for the overtime, we will use the minimum rate of 7.25. We'll multiply that by 1.5 and the overtime minimum rate is $10.88. From that, we will deduct the tip credit of $4.25 and the amount is $6.63. This is the rate that we are going to use for the overtime hours. And the overtime earnings are $66.30. So here her total earnings will be 150 the straight earnings, 150 tips, 62.50 the tip shortage that the employer covered, and 66.30 overtime. So the total amount is 428.80.